Hi, my name is Gabriel from Kodari Securities, and in this presentation, we will cover how an investor can buy and sell shares on the stock market, the several channels available to investors, and the different service offering of brokers. We will also cover why an individual needs to go through a broker to purchase and sell shares, and the regulatory framework governing brokers.
As always, all information given in this presentation is general in nature and does not take into account your personal needs or objectives. For further information, please visit our website www.kosec.com.au. So again, we will cover how to buy and sell shares, the channels available to investors to facilitate the purchase and selling of shares, namely discount brokers, full service brokers, how brokerage works, as well as some of the regulations on stockbrokers. If you want to purchase and sell shares on the stock market, be it a domestic or international one, you will require the services of a stockbroker. A stockbroker is a professional who has undertaken study of finance as well as industry qualifications relating to stockbroking. As a result of this educational background, stockbrokers will often be experts on equity investments and potentially other financial products. Stockbrokers are authorized to buy and sell on the exchange, allowing them to trade on the share market. As such, stockbrokers will facilitate your transactions, purchasing and selling shares on your behalf and other financial products depending on the circumstances. For this service, stockbrokers will charge a fee or fees depending on the broker, as well as the institution that they are attached to. This may, of course, vary depending on the circumstances, as well as any agreements made between brokers and clients. In more recent times, discount brokers have become increasingly more utilized due to their low brokerage costs, operating essentially on the internet. Indeed, the rising use of the internet and computers in facilitating the execution of transactions has also streamlined and reduced overall costs of the service, allowing more than just high net worth investors to buy and sell shares, but investors of all financial means. Essentially, discount brokers allow investors to place trades without having to go directly through a stockbroker. Rather, an investor inputs the trades and the discount broker executes it on the other side. Due to their low cost, they have become a popular alternative to full service brokers. Generally, discount brokers will only charge a fee per transaction executed and will not charge any other fees as they do not offer any other services. This may present a significant disadvantage to investors who have minimal knowledge regarding the stock market, as well as the equities offered on an exchange. In addition, many investors may not have the time required to fully research and conduct fundamental and technical analysis on shares offered on the stock market. As such, many retail investors will elect to use full-service stockbrokers. Full-service stockbrokers differ from discount brokers in that they provide investment advice, general or personal depending on the service offering, allowing an investor to have a better overall understanding without having to do research and analysis themselves. Moreover, full-service stockbrokers will provide advice on an investor's portfolio and general wealth management. This naturally allows investors employing the services of full-service brokers to high levels of analysis, as full-service brokers are generally experts on share markets and particularly equities. Stockbrokers may also be familiar with other financial products should an investor wish to engage them. In addition to this, platforms of full-service brokers often contain substantial amounts of fundamental analysis on companies, research, as well as technical analysis tools and software, which facilitates enhanced understanding of the market as well as economic conditions. Full-service stockbrokers may also provide clients with access to initial public offerings and pre-initial public offerings, as well as other financial products, which makes them an attractive option for investors seeking exposure to these capital growth channels. Full-service firms may or may not provide financial planning, usually giving clients general advice. As a result of this heightened level of analysis and expertise, full-service brokers charge more than discount brokers, as their service offering requires significantly more expertise and direct customer contact. Indeed, this is one of the starkest differentiators between discount and full-service brokers. Consequently, full-service brokers will charge transaction fees as well as advisory fees. Depending on the institution, a customer may be required to pay more than one advisory fee relating to the provision of advice on certain financial products, such as self-managed super funds, derivatives, and exchange-traded funds, amongst others. As such, investors who have less knowledge of the stock market and the companies operating within them will employ full-service brokers to buy and sell shares on their behalf with their consultation. Transaction fees are generally a percentage of the overall order placed, representing the cost of the service of the broker as well as the costs of clearing the transaction. As mentioned, discount brokers will charge significantly less than full-service brokers due to their minimal service offering, namely executing trades. Conversely, full-service brokers will charge higher transaction fees than discount brokers, which considers the advice and expert analysis provided by the broker as well as the costs of clearing the transaction. So, for example, imagine if you placed an order for 10,000 shares of a company in which each share costs 50 cents. This would cost $5,000. By going through a broker, you may pay either a percentage fee or a flat fee. This will generally depend on the size of the transaction. So let's say that the broker charges 2.5% brokerage. This means that the broker will require a payment of $125 for the services of the broker, plus the cost of clearing the transaction. Naturally, brokerage will change depending on the institution an investor goes through, as well as the size of the transaction. As stockbroking involves the deployment of clients' capital, the industry is subject to heavy regulation, and stockbrokers are required to undertake the acquisition of relevant qualifications in order to trade on the exchange. This ensures that all stockbrokers are aware and comply with regulations surrounding the provision of stockbroking services to promote transparency for investors employing stockbrokers and the overall legitimacy of the industry.
So, in this video, we have covered how an investor can buy and sell shares, some of the channels available to them, as well as some fundamental differences between discount brokers and full-service brokers. We've also touched on some of the regulations brokers are subject to. By having a better understanding of these different services, an investor will be more aware of the options available to them that best suit their investment profile. I hope you have found this informative. This video has been brought to you by KOSEC, Kodari Securities. Thank you and have a nice day.